We are now going to be focusing on the fundamentals of market analysis. So, when it comes to trading, there's three primary pillars that we all need to consider and make sure we grasp whenever we're trading. The three pillars are fundamental analysis, technical analysis, and the psychological part of trading. What I would always say to everybody is the psychological part is the most important thing, but it doesn't excuse the fact that you need to be able to do your technical analysis in order to place a trade. And it doesn't excuse the fact that we need to understand what's going on from a macroeconomic perspective and from a fundamental perspective to understand what trends we're currently in, whether we're in a big uptrend or a big downtrend, because all of these things are dictated by all of the fundamental things that go on in the world. So I'll give you an example. When COVID happened, if you're a trader, COVID would contribute towards the fundamental analysis. When COVID happened, even though the world was in chaos and there was a lot of bad things happening, as a trader, if you took advantage of that piece of fundamental analysis that you was exposed to, you could have taken advantage of that and you would have been in a sell, and then you would have been able to accumulate quite a bit of funds from the sell-off that we had during that period of time. So one thing that you guys are all going to understand after this session is that whenever there's something happening in the world today, you can actually use that for your advantage when you're trading. So instead of getting sucked into everything that's going on from a worldly perspective, now your way of looking at things is okay, well, what does it mean for the markets? So if this is happening, or if a war is going to happen, does that mean that there are certain currencies or commodities or indices that I can start selling to profit off the war? I mean, of course, if things get really bad, and your life starts coming into play, of course, you don't want to be thinking, how can I profit off this? How can I trade off this? But that's how traders generally tend to think. When bad things are happening and good things are happening, they always compare that to the markets and they use that to create more opportunities for themselves within the markets. So that's a very, very important thing to consider. So today we're going to look at the economic calendar. So economic calendar, where I'm going to show you guys, give you a breakdown into the high, medium, and low impact news. We're also going to look into the key reports, so key reports that drive the markets from a fundamental perspective. So these things include the non-farm payroll, CPI. Sorry, that's a typo. It should be GDP, gross domestic product, interest rates, central bank policy. And then after that, we're going to look in country profiles. We're going to look at specific things that drive countries, whether it drives their currency to become stronger or weaker. And then after that, as we always get onto, we're going to end with a bit of mindset and psychological. So I said to everyone today that today's going to be a bit of an interactive session. So what I'm hoping is that all of you guys have access to a laptop or a computer of some sort. And if you don't, then you can use your iPhone. But it's very important that you guys follow the steps that I'm going to give to you, because this is what's going to kind of act as a primary method of resource for you guys when you are looking into your fundamental analysis. So the first things first is the economic calendar. So as a trader, I go to my economic calendar every single week. So either ideally you should be doing it on a Sunday. It's always better to be prepared. So on a Sunday, you should be opening up your economic calendar, making sure that you understand or you have some sort of insight in regards to what is going to happen from a fundamental standpoint for the week coming. If you don't have any idea what's going to happen, or you're not prepared for what's going to happen, what could potentially happen is that you're looking to go into a trade, you're setting up for a trade, some high impact news comes out, you all of a sudden are thinking, why is the markets going so crazy? Why is there big spikes or huge momentum to the upside or the downside? And you're getting nervous wanting to come out of your trade, not realizing that there was actually a high impact news that was due to come out at that specific time on that specific day. So it's very, very important to always make sure that you've got a certain amount of insight into the markets every single week. Now, first things first. So Forex Facts. So there's a couple of good fundamental sites that I use, and I'd always recommend to people. One thing I always say to everyone here is, as you continue to trade, there's certain sites that you might gravitate to more than others. I might recommend one. You might come to find another site. You might like it better than the one I've recommended. There is no right or wrong, but at the same time, you've got to make sure that whatever information or news that's being fed to you is always accurate and is always aligned with the figures that's coming out at the time it comes out. So the two I'm going to recommend, and I want you guys to now go into your browser. So everyone, can you open up your browser? I'm going to share my window with you as well now. I want everybody to type in Forex Factory. So I'm going to get the link and I'm going to put the link in the group for everybody to get access to that. So everyone should have that link, which I've just put in the chat. If you've got the link, just give a thumbs up. You can feel free to unmute yourself, say you've got it. Cool. We currently have 22 people in this chat right here, so I expect to see a few more thumbs up. Otherwise, I'm just going to assume that you're not opening the link. And as I'm saying to you guys, for anyone that's taking trading seriously, you do need to make sure you become familiar with these platforms. Cool. Let's keep it moving for the sake of time. So every one of you should see, wait, let me share my screen. Oh, not sharing. Boom. So your screen should look something like this. This is how everyone's screen should look. Guys, don't be shy. Literally, any one of you, once you've got the okay, feel free to unmute yourself as well as putting up a thumbs up as well. So, perfect. Brilliant. So I'm assuming everyone's screen looks like this. Now, this is Forex Factory and my FX book are two sites that I tend to go to as a trader to make sure that I can get access to all of the different news that's coming out throughout the week, throughout the day, upcoming month, to make sure I've got some sort of, insight into the markets from a fundamental standpoint. Now, Forex Factory, what you want to do, so right now I'm going to teach you guys, I'm going to take you through the whole setting up of this process. And then once you set it up, that should save. Once it saves, you should always kind of be presented with this type of view going forward. So some of yours won't look like mine simply because I use this all the time. So I'm just going to hope that the instructions I can give you differ slightly to mine. Okay. All right. What you guys want to go to is the filter. So if you can see here, I'm on that filter button. You want to click on filter. Once you click on filter, you've got these different boxes. So these different boxes represent, as you can see here, the impact of the news that gets released every single day or on a weekly basis. You want to untick the gray one because the gray one is pretty much non-economic, so it doesn't impact the charts at all. And you also want to unclick the yellow one as well. That's low impact as well. Now, the reason why I say that is because the way in which we're going to be trading, which is driven by the technical analysis, the only news, generally speaking, that impacts our trades, whether it's from a good perspective or a negative perspective, tends to be medium impact news or high impact news. So these are the only two that you guys should really be worrying about. Anything other than medium and high, it's not really any of our concern. Now, if you look at the event types, you want all of the event types clicked as well, because in terms of impact, the event types kind of tell us what sort of impact we are going to have, whether it may be growth, inflation, reports, unemployment rate, central bank decisions, bonds and yields, speeches, which is a very, very big thing. I'll get into that later on. All of you guys want to make sure that you have all of this ticked. So it should look like that. Also, the currencies, all of these currencies, this is what should be displayed on your side. And that should also be ticked on your side as well. So I'm hoping that's all ticked on your side. Once you've got all of this, so really and truly, if you've just unticked those two boxes, you just want to click on apply filter. Once you've applied it, what should happen? It will update your calendar view and it should look something similar like this. You should have a combination of orange boxes or red boxes, which again represents the type of impacts that we're going to get exposed to in terms of news. If you guys can just like give a thumbs up, just so I know that you're following.
Yep.
Yeah.
Yeah.
Perfect. Thank you.
Yeah, following.
All right. So this is the impact. So in terms of the impact, now what we're going to get onto is the actual plus the previous plus the forecast. So when we're looking at impact news, what we're generally looking at is what is the forecast for the news and what figure comes out in terms of the actual. Now, generally speaking, if the figure for the actual is better than the forecasted news, what that means is that it's going to add a lot of strength to that particular currency or to that particular financial instrument that you guys are trading. So what I said, each country has a set of news that really, really drives it, especially from a momentum perspective. So one news that is really popular and everybody really looks forward to that on a monthly basis is called non-farm payrolls. So non-farm payrolls, I'll go to, so it's not showing now. I need to go to last week. Here you go. So this is the non-farm payroll here. So the non-farm payroll basically it calculates the earnings, the unemployment and the employment change in America from month to month. America, in terms of their employment change, if they get a higher number of unemployment, then that genuinely has a bad effect in terms of the currency or the pair or whatever you choose to trade. If it has a good outcome in terms of the actual, if it's better than expected or in line with the forecasted news, it tends to have a very, very good impact. And non-farm payroll, because US is heavily reliant on their unemployment and their employment change, non-farm payroll tends to be quite a big mover for the US, anything associated with the USD every single month. Now, non-farm payroll, that comes out on the first Friday of every month. Write that down in your diaries, note it down on a piece of paper, because if you are getting into a trade, you intend to get into some sort of trade, non-farm payroll, which comes out on the first Friday of every month at 1:30 p.m. every single month. If you're looking to get into a trade and you don't know non-farm payroll is coming out, you might get into a trade and find yourself being in a very unpleasant situation, which, of course, is not going to be good for your confidence, especially as a new trader. So note that down. The first Friday of every single month at 1:30 p.m. is when non-farm payroll comes out. And
Bentley, Bentley, is that just for the US markets or is that for all markets?
it impacts all markets that's associated with the US. So
Okay. So it's for the US, but it affects all the other markets because of the knock-on effect of the USD.
Yeah.
Got you.
So if you're trading USD GBP, Euro USD, USD CAD, any currency pair that is linked with the dollar is going to have quite a big impact on it. If you're trading an indice, US 30, as I mentioned to you guys last week, is the top 30 countries in the US that contributes towards the economy. It's going to have a knock-on effect on the US 30 as well. Germany 40, which isn't actually a US indice, it's a Germany indice, because it correlates quite heavily with the US 30, and they do kind of have a lot of ties with each other in terms of deals that they make. It does tend to have a bit of an effect on Germany 30 as well. It has a knock-on effect on US dollar index and not oil as of much, but generally speaking, any currency pair that you're going to trade, expect that it will affect it. And I would say, aside from interest bank rate decisions and the conferences that we get from time to time, US 30 is definitely up there in terms of high impact news. So if you guys open up another, so this is the, so what you guys want to do every single Sunday, open this up. You can see for the whole week what is going on. So it allows you to understand what can you expect in terms of potential momentum or potential breakouts or potential volatility in the markets. So we have loads. So we have things called CPI, which is core performance indicator. We have GDP, as I said, gross domestic product. We have ECB. Now this is big, even though it says orange, it's quite big because when you generally have a governor speaking, especially when they have their conference call or monetary policy report hearing, that's when they tend to kind of give you a bit of an insight in regards to what their future projections are for their economy. So when I was trading before and I was more reliant on fundamentals than technicals, I would always make sure that I was always open to. There's this guy called President Mario Draghi. Mario Draghi was the governor for the European Central Bank. Anytime he spoke, anytime they had a meeting, you can bet things would fly on that day, hundreds and hundreds of points, and once it flew, that's when you got your direction for the day, and that's when it kind of put into motion the direction for the other weeks to come. So it's very important that when we do have a conference call or conference hearing for any of these countries, whether it's the USD or the Bank of England or the European Central Banks, generally speaking, those conferences will tend to give you the direction of where a currency is going to go over the next few weeks, maybe even going into the next few months. So pay close attention to that. Now, I also want you guys to open my FX book here as well. So open a new tab if you can, and I'll put the link in a group. Sorry, Terry, I've just seen your message. Would you say it impacts the GBP JPY? Are you referring to NFP, non-farm payroll?
Yeah.
Okay, no, not particularly. It doesn't have any direct knock-on effects on the GBP JPY. Generally speaking, this is where it gets a bit complex, right? If you have GBP JPY that correlates with a currency pair that has some sort of affiliation to a USD that's involved in that currency pair, it might have a bit of a knock-on effect, but not so much. The whole idea is that when we are trading, we're not trading momentum, but we're trading impulse and correction. The whole point of us being able to generate, I'm not saying I want you guys to generate money over a short period of time, but you do want to make sure that you're getting involved in trades where there's a good amount of momentum so you can generate your profits in a suitable period of time. You don't want to be in a trade where it's taking you 2 weeks just to make 50 points. For some people it might work, depending on your mindset and depending on your tolerance. But for most people, generally speaking, 50 points in 2 weeks is very, very slow. The reason why I mention this point is because if GBP JPY does somewhat to some degree, it's been affected by the non-farm payroll. It won't be affected in a big way at all. It will probably be in a very, very minuscule way. So you probably want to look at the pairs that's directly correlates with the dollar if you are going to trade NFP. I would never advise anyone here to trade NFP, by the way. And that's something I'm going to explain a bit more. When you're trading, we are identifying corrections. The reason why we're having this conversation today about fundamental news is so you guys can be well prepared when something comes out from a fundamental perspective after you've done your technical analysis, to set your expectations in regards to us having a huge amount of momentum or it just being a nice calm day. That's the main purpose for identifying this, and for you guys to understand and try to really do a heavy bit of research in regards to what's happening from a long-term perspective in regards to the trends that you're getting involved in. So that's something that we really, really need to pay close attention to. So when coming back to My FX book. So my FX book is very similar to Forex Factory. Now, I would say Forex Factory is probably more heavily used from retail traders like us. We are all retail traders. But my FX book, visually, for me personally, it's a bit more clear. I can see things more clearly. So if you look at my FX book, it's a bit dated. But what you can do, as well as well, you can do this in my FX book as well. To be honest with you, if you want to understand what non-farm payroll is, all you've got to do is click on this folder. Once you click on the folder, it breaks down exactly what non-farm payroll is and the sort of effects that it has on the currency. So all of this additional research you guys can do in your own time to make sure you're very familiar with what, as I said, CPI is, what NFP is, what GDP is. So once you're familiar with that and you understand it and you're very comprehensive in your understanding, it's then easier for you to digest the information or the figures that come out. So just really quickly, as you guys can see here, you've got the source, Bureau of Labor Statistics. So this source here is where all of the statistics and the figures come from. They feed that into the retail trading sites like Forex Factory and my FX book. But if you really want accurate, concise, not just concise, but a fully thorough and comprehensive details on what Suffolk is, especially for NFP or anything to do with America, you can go to the Bureau of Labor. So it's usually BLS. And get a bit more information in that. I'm not going to break it down to you because it's very long. There's so much going on in there. But if I just literally click it just for the sake of it, this is kind of what it looks like. So for any of you guys who are fundamental fanatics and really want to look into that, feel free, but don't allow it to distract from the other important things that we're going to be discussing in the upcoming weeks. So
to interject, Quickly, can you send a link of that into the group chat, please?
yeah, that's fine.
Thank you.
So here it breaks down, it tells you what it measures, the change of number, the usual effects, the frequency, as I said here, released every single month, the first Friday after the month ends. It gives you the next release. It gives you a really, really comprehensive understanding and allows you to see exactly what's going to happen going forward. So yeah, when you guys have time, click on these little folders and it will allow you to give you a really concise breakdown of everything. So Forex Factory is pretty much the same thing, but if you're more lean towards visual aesthetics, then this one, unlike my FX book, Forex Factory, it kind of gives you, the icons for the countries. As I said, it's more of a visual standpoint. It gives you the color codes and a bit more. It's a bit more in your face in terms of what to look out for, and it's just a bit more clear. So me personally, I like to use my FX book only because visually it looks clear, but a lot of people, if they want a comprehensive understanding, they would go to Forex Factory. I'd say go between the two. As I said at the beginning of the call, depending on what floats your boat personally will determine what one you choose to go to. Now, I want you guys to open up a third tab. I'm going to send you this third tab again. So this third tab, I'm going to put in a group. So this third tab is really, really good as well. It's very similar to Forex Factory and it's genuinely focused on, the economical side, economics, the macroeconomics, microeconomics as well. And it really does give you a nice, thorough, comprehensive breakdown again. So this is what it looks like. For me, this is kind of a hybrid of the both. So you've got this, which feels a bit dated. You've got this, which feels a bit more visually stimulating. And then you've got this, which looks like it's kind of a hybrid between the both. This is something I've been using a lot recently. I would highly recommend it for everyone. Again, I'll put the links in the group, like K1 asked me to. And I would definitely say, if you could, just test out all three. Whatever gravitates to you the most, just go for that one. But I would definitely say, if you can, try to stick with this one. This is a really, really good one as well. Again, it gives you a comprehensive breakdown of what everything is. So if you're looking at, I don't know, let's just see inflation rate, for instance. Again, if you are going to look at this, you want to make sure you filter everything accordingly. So if we don't really follow Argentina, we don't follow Brazil, the main currency pairs that we follow is US dollar, USD, GBP, Australian dollar, New Zealand, Swiss franc. Again, all of these things are in the document, which I'm going to show you. But whatever is in the document, you want to tick those to make sure that everything aligns directly with the currency pairs that you tend to trade. Again, you want to make sure that you filter the impact accordingly as well. So if you, this one, as I said, you ideally want high impact or medium impact news. Doesn't allow me to. And then again, it will filter everything according to the sort of settings you've put within it. So I'm going to take it back to the presentation now. Cool. So that which I just showed you guys is the economic calendar sites. So always refer to that on a Sunday so you know what's going on. And we also went through the high, the medium, and the impact news as well. As I said to you, I'm not going to go into detail and bore all of you guys about, what is a CPI, what is a GDP. You guys have access to that. You can read it. Make sure you familiarize yourself with everything. And then as we keep progressing through the course. We also touched on the... One second. We also touched on the actual versus the forecast versus the previous. So again, if you guys are looking at my FX book or Forex Factory, you always need to look at what has been forecasted for that particular news. And then you always need to compare that with the actual as well. If the actual is better than the forecasted, generally speaking, you can expect a good result or good impact. If the actual is worse than what the forecasted is or what the forecasted was, then generally speaking, is going to weaken that particular currency or that particular instrument that you are trading. So when is high impact news, as I said, expect a huge amount of volatility. And make sure that you are open to that, because that's just the reality of this of the trading game that we're going to be in. There's always going to be a decent amount of volatility, and it might spike, it might take you out, it might go in your favor, but that's just the reality of trading. So that's something that you've got to embrace from the beginning. If you can't embrace that the market will be volatile at some points, then trading's probably not for you. You're better off just investing from a long-term perspective, because with trading, there's a lot of action and a lot of activity going on from week to week. And just remember, the markets moves on the difference between the actual and the forecast, not on good or bad in terms of isolation. So what I shared with you was the websites that retail traders use. What I'm going to show you guys now is the websites that these official datas come from. Now, the difference between the retail platforms, the economic calendars that I just showed you, and the websites in terms of the data, where these the official websites where the data comes from, is the difference between speed and accuracy. So let's share the screen now. So a few websites that we really need to be aware of if we really want to go deep in terms of the accuracy of the data. So official Office for National Statistics. So anything to do with GDP, anything to do with the pound, the GBP, in terms of inflation, in terms of Bank of England minutes or the GDP. If you want the most accurate data, go to Office for National Statistics. That is going to give you the most accurate data. It's going to be more accurate than any of these data here, because what you'll tend to find, if we look at here, day one, where it says BRC retail sales monitor. Sometimes this could be 1% off. It's not always the most accurate. Whereas if you want something that's, spot on, always go to the national statistics. Now, the only disadvantage about going to these websites is that the data is usually released on the economic calendars first, and then they usually refine it and put it on these websites after. So what I would say to you is that if you are looking for a long-term trend and you want to understand where the trend is going, or you want to understand the state of a country, whether it's America, Europe, or the pound, go to these official government websites and really try to get your head to understand what's going on in terms of the state of the economy. Don't use these calendars here. Use these calendars here just so you're aware of what's coming out from week to week. Another site you want to be using is Bank of England. So bankofengland.co.uk, it gives you, again, the most accurate data about the minutes, the press conferences that's coming out, the interest rate decisions, the core inflation rate, CPI, all of that. Go to the Bank of England as well as Office for National Statistics. So these two websites are the only two websites that you should be using in terms of getting accurate data for the pound. Now, if you want the accurate data for the dollar, we've already gone through this, to be honest with you. No, so this is European Central Bank. You want to go to ecb.europea. I will send these links in the community so all of you will have access to these links. Again, it's the equivalent to the pound. The only difference is it's giving you data on behalf of the euro. So anything to do with inflation rate, press conferences, monetary policy agreements, you always want to refer to this site as the official accurate data. And again, anything to do with the dollar, we already spoke about this 10 minutes ago. You want to go to the Bureau of Labor Statistics, and this will give you all of the official accurate data when it comes to non-farm payrolls, average hourly earnings, and anything to do with the state of the US economy. So I will give you all of these resources and pages. I will feed that into each and every one of you. Does it all make sense what I'm saying so far? Just for everyone listening, I want to make sure that the information is not just coming in one there, going out the other. I need to make sure. Cool. Everyone else, are you good with that as well?
Yeah, all good.
All right, perfect. So.
Can I ask actually, like with these, so for example, say like, with the current war or potential war that's coming, right? Or that could potentially impact a lot of things. Would you say it's good to basically check each website, or is it specific? If it's just specifically about US, you're going obviously on this one, the labor statistics, or if it's about the does that make sense? Like if we know that, I don't know, the US decide to, I don't know, go against China and Russia, for example, like where would we, and it would affect something that's going to obviously have a knock-on effect. What website would be the most reliable? Does that make sense?
Yeah, good question. Very good question. So you want to use, okay. Do you have Sky, or do many of you have Sky? Because if you have Sky, you also, when I was kind of trading from day to day and had my TV on playing as well, I had Bloomberg on as well. So Bloomberg on Sky is channel 502. So it's always good to kind of have these things playing in the background. This is if you are at home trading, because it will always keep you up to date with everything that's going on. So to answer your question, from the perspective of a war that includes US or involves US, you want to be having, I would say, multiple streams of resources open, multiple forms of medias, to make sure that you're aligned with what's going on. So from a TV standpoint, you want to have Bloomberg or Reuters. I would ideally suggest Bloomberg. From a retail calendar perspective, I would say go with Forex Factory or Economic Calendar. With trading economics, it does focus on fundamentals more than anything else. So if we go to the news, which is hopefully you guys can see that here, anything that's going on is quite also instant with the news updates as well. It does give you everything that's going on in terms of the news. And if you look at Forex Factory and you go to the home page, here, if you look at the news section here as well, they're usually quite quick with updating people with all of the different news that's coming out as well. Whether it's US related, Japan related, Japanese, Chinese, Russia, anything. Generally speaking, Forex Factory, trading economics is usually very good. In terms of data and figures and statistics for different country profiles, you do want to use these sites individually. So anything to do specifically GBP related, go to these two sites. Euro related, go to this one. US related, go to that one as well. And there is one for Japan and China, which I will get for all of you guys, and I'll include that in the links. But you will tend to find if you've got Bloomberg playing plus these two websites open, you'll be pretty much up to date with everything that's going on. I hope that answered your question.
Did, thank you. Cheers.
No worries. Cool. So let's go back to this. So we already looked at some of the key reports to follow. So as you guys can see here, there's NFP we've already discussed. CPI is quite a big one, and core inflation is a huge one as well. So if you do see any sort of anything that's coming out during the upcoming weeks to do with CPI, definitely make sure you are bearing that in mind when you are doing your setups throughout the week. And GDP, as I mentioned before briefly, gross domestic product, also want to make sure you've got your eyes open for that as well. GDP usually has quite a big impact on the pound. And it also usually has quite a big impact on the US and the euro as well, or anything in relation to that. And the rate decisions as well. Rate decisions is, if I'm being honest, is probably the biggest one out of everything that I've already discussed. And I'll explain that now. So when you're looking at the rate decisions, what you're looking at is the central bank announcements. The central bank announcements comes from loads of different banks that's associated, loads of different major banks that's associated with a particular country. So for America, we're looking at the Federal Reserve, which is also known as the FED. For England, for UK, we're looking at the Bank of England. I'm sure we all know, most of us know. For Europe, we're usually looking at the European Central Bank. And for Japan, we look at the Bank of Japan. Now, in terms of these central banks, they usually cover the interest rate decisions, and within that, they either hike it, they cut it, or they hold it. Now, I'm sure many of you guys know, if we've got an interest rate, let's just say in UK, that's held at 2.5%, and they hike it. What that means is that for people who are buying a property, people who are buying a car, whether it's on HP, anything, the interest they're going to have to pay on that is going to increase, of course. From somebody who's a supplier, not a supplier, who's a consumer, it's not great. But from somebody who's an investor, that's an amazing thing. So generally speaking, whilst the suppliers or the people who are taking out, these homes or mortgages or any of these things are usually being impacted in a bad way, from an investor's perspective, it's actually probably the best thing they could ask for. So investors want interest rates to be high, but obviously they don't want it to be too high, because if it's too high, it creates an imbalance in the poor and the rich. So they need to make sure that it's balanced at a point where the rich can continue to get rich and the poor will be poor, but it won't be too much of a struggle. They can still survive from day to day. So that's why they're very strategical about the interest rates and how they choose to hike it, hold it, or cut it. So with your bank, if they increase interest rates, of course, you put money in your bank, you get more interest on your savings. If they reduce the interest rates, you get less interest. From the perspective of an investor, if there's high interest rates in a savings account or a ISA account, it's going to entice more investors to come and invest into anything that's associated with the UK, whether it may be savings, property, whatever it is. So these things usually have a massive impact on the long-term trend of where a country goes or where a particular currency or trading industry goes. Hence why it's such an important thing for everybody to consider and be aware of when these press conferences or when these interest rate decisions are announced, which I'm sure all of you know. When they announce rate decisions in UK, people are either complaining if they're a consumer or they're very happy if they're an investor. The whole point of this world and the system that we live in is to serve investors. Hence why. So whilst I'm teaching you this now, hopefully it's putting you guys in the perspective of an investor. So you think, and if you continue to think more like an investor, it means that you can take advantage of the different opportunities that come to us, whether it may look good or bad, whether it may be a war or it may be, you know, something brilliant happening in terms of an interest rate. So when you're
But now, sorry,
yeah.
just really quickly again. So you mentioned obviously press conference announcements and stuff. That's obviously that means to any currency that you're going to be trading in, or like whether it's US. I don't know if that's making sense, but basically what I'm trying to say is there like a calendar or a list or a go-to of like we know what type of announcements or when, or is it literally just being on job every day almost
Yeah,
and looking
so
out for it?
definitely with the Forex Factory and the My FX book and the other one, which is Trading Economics. So with the calendar that I showed all of you, that calendar allows you to stay up to date with what's going on every single week. I think there's some sites that allow you to see from a monthly standpoint, but ideally you want to look at it on a weekly basis. So as I mentioned, so every single Sunday, what you want to be doing is going into either Forex Factory, My FX book, or Trading Economics, and looking at the calendars, what is going on every single week. Now we've got a press conference for the Euro this Wednesday. So we know that within that press conference, depending on what happens, that's either going to allow the euro to start its downtrend or it's going to make it continue in its uptrend. Depending on what they say within a press conference, the policy statements that gets released, and the votes that also get released after the press conference as well. But always stay, you can all, to answer your question, that information will always be in your calendars. So just make sure you check out your calendars. It doesn't need to be every day. Check it out every Sunday so you know what's going on.
Thank you. Sorry. Thank
Yeah,
you. Thank you.
no worries at all. So the rate decision and the guidance. So the policy statement is a document which is released with the rate decision, and that document usually, as I said, explains whether it's held, cut, or or raised. It sets the tone, as I mentioned. Rather, sometimes it's hawkish. When someone says it's hawkish, it means that it's bullish, meaning it's going to strengthen the currency, and sometimes it's dovish. I'm giving you the terminology now. When it says it's dovish, that means that it's bearish, which then leads to the weakening of a currency or of a country. Now, the policy statement is it does have an impact on the direction of the trading instrument, but it's not as important as the press conference itself, because the policy statement might tell you the figure of what something's been changed to, but it's the press conference that's going to allow you to understand, okay, well, we've changed it to this figure. How long are we going to hold it at this figure for? Are we going to hold it at this figure for a few months? And are we indicating within the conference that this figure is going to hike again? Or are we going to hold it at this figure for a few months and then indicating that we're going to cut it and it's going to lower again? So what I mean, the reason why this is important, why I mentioned this, is because when they start to indicate to you what they're doing or what their intention is from a future perspective, that then allows you to understand what long-term trend are we going to be entering for a particular currency or a particular instrument. So say, for instance, GBP, they held their interest rates at 2.0. They then had a press conference, which usually happens 30 minutes after you get the policy statements. In their press conference, they were sounding really hawkish. We've held it at this, but where we think the economy is growing strong, we're looking really, really good. Therefore, we're probably going to increase it to 2.2%. Now, what that is saying to you is that even though the figure that's been released today is the figure today and it's created a bit of momentum in the markets, it's also showing you that the governors are indicating that we're going to get stronger, which means that I can expect a strong trend for the pound to go up over the next few months. Hence why the press conference is actually a lot more important than the policy statement itself. So when you're listening to press conferences, I always listen on Bloomberg. Press conferences, so the Bloomberg, they come up, they're in their room. There's a lot of the governors in the room, these, wealthy people, whatever it is, and they tend to have their conversation. Whilst they're having their conversation, the journalists within that room will ask them questions. And then depending on how they answer the questions from the journalists will determine how the market tends to react from the point of that conference that's been had on that day. Does that make sense to all of you guys listening? If I don't hear anything,
Yeah.
take it as it
Yeah,
does.
makes sense.
Yeah.
Cool. So when you have the press conference, it's usually followed up by votes. Now, the votes is very important because what the votes mean is who is aligned with what the governor's saying is going to happen, who believes it, and who really thinks it's BS. That's what it really means. So if a lot of the votes go in the favor of what the governor's saying in the press conference, usually the votes is like out of 8 or out of 10, and you've got let's say 9 out of 10 votes, then if the senior people involved in that are believing what the governor's saying or they're on board with that, it's probably likely we're going to go in that direction. Now, if you have votes where it says that, it's kind of disagreeing with what the governor's saying, the governor, I believe, is who's the governor for? Can you guys do any of you guys know I really don't know the name of the governor. I don't pay attention to the names. I pay attention to what's being said. Your name could be called Paul, Phil, whatever it is. I really couldn't care less. But if it's when it comes to the votes, if somebody's in disagreement with, let's just say, Paul, who's speaking, and their votes are going against what he's saying, then the chances are there's a bit of uncertainty within what has been said from the governor, which means we're a bit unsure. And when usually you're unsure, it leads to fear. If you're not sure about something, you tend to kind of step back. If you step back, that usually has an effect on the pound weakening. So we like to make sure that when we are looking at the rate decisions, we focus on the policy statement first. We then focus on the press conference next, which is the big meaty part, where it gives you an indication of whether they're going to be hawkish or dovish for the future. And then we focus on the votes. Does all the senior people within that committee agree? Are they on board with what the governor's saying? Or are they not too sure? Are they still a bit skeptical? So always bear those 3 pillars in mind whenever you are listening to a press conference. As I mentioned, put on Bloomberg, Channel 502, you can see them talking, you can get involved in the action as it happens. Again, the same thing for Bank of England, we get for European Central Bank, ECB, we get for Bank of Japan, and we get for the Fed as well. They all come out at different periods and points of the year, but you should always make sure you are in front of the screen if possible for when that happens. It usually comes out in the evening, UK time. So anything for America, because America's 5 to 6 hours behind, generally speaking. When they have the Fed discussing, the Fed is massive, huge news. That usually happens around 7 p.m. I think the report gets released at 7 or 7:30. I don't know the exact times. And then the press conference starts half an hour after the report's been released. So that's one thing that you guys will always see. And then if you actually look at your charts, which we'll do in the future, you'll see that when the report comes out, it has a sudden spike. There's a spot, there's a bit of momentum in it, but then it calms down again because obviously it's waiting for the press conference, which is happening 30 minutes later. So that is the rate decisions and guidance. Very, very important stuff that everybody here should be mindful of and considering whenever they are trading. So country profiles. Now, I'm not going, for the sake of time, I'm not going to go really deep into the country profiles only because everything. So if you look here at the screen that I'm presenting to you, I've laid out every single key data and traits of every single country. So we've got the USD, we've got the GBP, Euro, Japanese yen, Aussie. Literally, I've manually just created all of these pages to make sure that you guys can actually have your own little cheat sheet in terms of all of the country profiles. So look this up once we finish. And again, I will share the document with you guys after the call's done. So with the profiles, it's important to understand that every single currency has its own personality. As I just shared with you guys just now, every country profile is going to differ to the next. Each one reacts to different types of news and different types of events. You've got your cheat sheet, so you'll be able to see what moves each country profile. And what I've done is basically put together a very, very simple guide that you guys can use whenever you're trading. So you've got that level of insight. Insight allows you to make better informed decisions. So make sure you look at it. So it's just to make sure you know what moves the dollar, what moves the pound, what strengthens the Swiss, strengthens the Aussie. So when markets are moving, you're not scared about what's going on. Did I hear someone try to ask a question whilst I was talking? Probably not, Paul. So as I said, I'm not going to go into detail about everything because it's going to take far too long. We're going to be on this call for another hour if I was to do so. But I do want you to use it as an overview, use this overview as reference, and just make sure just use it as your cheat sheet. Whatever data matters the most, you guys got access to all of that data on that cheat sheet. Now, if we scroll down to currency groups, so this here is very important as well. Really, really important for you guys to understand. So instead of memorizing every detail about every single country, because it's just too much information to consume in one go, it's usually easier to look at it in terms of groups. So every country profile has similarities to others. So we've got safe haven currencies. So the safe haven currencies would be your USD, JPY, Swiss franc, and these strengthen when the world is in panic or risk. So if we're going into war, question that was asked before, or there's COVID that's gone on, generally speaking, the dollar would strengthen, the yen would strengthen, and the Swiss franc would strengthen as well as other instruments like gold and other stuff. The indices will collapse, stocks will generally collapse. So you don't want to, of course, you don't want to be going into that. Now, if the world is in a good place and everything's hunky-dory, then generally speaking, the dollar will weaken, the yen would weaken, and also the Swiss franc would weaken as well. So bear that in mind. Now, then we've got the commodity currencies. So these currencies are very tied, closely related to commodities like gold, silver, oil. These currency commodities are the Aussie dollar, the CAD, and the NZD. So these rise when the commodities or global trade is strong. So if oil is going good, the oil is high in terms of the value of it, then you can expect a strong CAD. If the oil is low, then you probably expect a weak CAD. And they fall when the risk sentiment is weak as well. And then finally, we've got our regional. So this is the regional ones here. So the regional majors. So the regional majors are known as the GBP and the Euro, which are heavily data driven, and they can be very volatile and surprises. So as we get into our technical analysis in the next few weeks, what you're going to see is that the pound is heavily influenced by data. When the GBP, if the gross domestic product is bad, that has quite a big impact on the pound. If it's good, it has a good impact. Retail sales, bad, obviously has a bad effect. Good has a good effect. Same thing with euro as well. So when it comes to these resources like Forex Factory or these economic calendars, once you do start to link the data, the fundamental data with the currency pairs, you do tend to see a strong amount of correlation with everything as we go forward. So how do you use these country profiles when trading? So hopefully everyone can understand very clearly that this isn't just a theory. I'm not showing you just for the sake of showing you for the fun of it. I'm showing it to you so you can apply it for when you're trading your financial instruments, whether it's Forex, whether it's indices, or whether it's commodities. Whenever you're planning your trades, I want you guys to ask yourself, what is moving this currency pair right now? Is it the interest rate decisions? Is it the CPI? Is it the GDP? Is it the non-farm payrolls? Always ask yourself and be mindful of whenever I'm in a trend, how is this trend being dictated from a fundamental standpoint? If oil is rallying, then that means that the CAD is probably a good currency pair to watch. CAD dollar, CAD yen, CAD pound. It means the CAD is getting strong. So you might want to think about buying the CAD over anything else. If there's fear in the markets, then safe havens like the yen or the Swiss franc may strengthen. So if there's a lot of things going on, I mean, the world isn't great right now. That's why you'll see that the yen is quite high. The Swiss franc is also doing quite good as well as the gold. And if the UK inflation has been compromised, or if there's a surprise in UK inflation, just expect the pound to be very, very volatile when you're trading anything that's associated with the pound. So bear all of that in mind, and by keeping and understanding this framework in your mind, you can then trade with more context, more understanding, more insight, and then that allows you to make better informed trades. And this is what separates a retail trader from guessing, oh, what's this, what's that, in comparison to a professional trader who now understands why the market is moving up or why the market is moving down. So that is how to use pairs. Now we are going into the final part of this session. What I'm going to do, let's go away for a 3-minute break because I've said quite a lot. Come back for, let's just say, 7 minutes past. We're going to go over the final part, which is the trader's mindset, patience, which is what allows you to have the edge over anything else. So 3 minutes, have a break, and then we'll come back again. Oh, we are back. So I hope everyone has had a nice short break. Let's go. So this part, I mean, I'm going to sound like a broken record here, but repetition is key. In order to be great at what you do, you've got to repeat day in, day out. And the most important thing that any trader or aspiring trader can and needs to understand is the power of mindset. Every single trader fails because of this one very thing that is often overlooked. People focus so much on having such a great trading strategy, having such a great, technical analysis tools. That's easy. All of you lot will grasp that. Some of you guys will grasp it sooner than later, but with like driving, once you understand how to drive, you just know how to drive. The exact same thing applies to the technical analysis. Now, what people often overlook is the psychological aspect of trading, as I mentioned last week as well. And that's why in every single lesson that we have, we will always dedicate the last 10 to 15 minutes to mindset and trading psychology. Because it's your patience, it's your consistency, it's your fear, it's your greed, it's your understanding of yourself, it's your discipline, it's your commitment that's either going to allow you to be a successful trader or is going to hold you back and make you become a trader that's unsuccessful and then be another person that says trading is not for me because of X, Y, and Z. It's not that trading is not for you, it's just that a lot of people aren't able to establish a certain amount of consistency and discipline to make sure they can allow themselves to be profitable year in, year out. You will always lose trades. You don't expect to come into this game and not lose. You will lose. But the whole point is probability. Look at things in probability. If every 8 trades you're putting on, you're winning, and every 2 you're losing, but your risk to reward ratio is done correctly, then you're still winning at the end of it. When people have a good week, 1 week, and the following week they have a bad week, they tend to think that they're unsuccessful, and that they tend to make that dishearten them to a point where they now start instilling bad habits, whether it may be based off fear, whether it may be based off anger, based on the last week, the bad week that they had, without realizing that you need to keep it consistent throughout the year. And even if you do have about 5 bad weeks throughout the year, if you actually compile it all together, you still had a very, very good year. So I will always advise to anybody, Don't look at your profits from a weekly perspective. Look at your profits from a monthly or annual perspective. If you can look at it from an annual perspective, that's better than monthly perspective, because you will have your ups and your downs every single month. But the whole point in trading is that you have your up, you have a little down. You have an up, you have a little down. That's how it works. Just like how I showed you guys how corrections and impulses work in the markets, it's exactly like how your wins and your losses should work as well. If you're having an impulse, that's your good day. If you're having a correction, that's one loss. Have an impulse again, you're having a lot of good days. Have another correction, that's another loss. By the time you piece it all together over a period of a year, you've actually had a lot of really, really good, impulsive, successful trading sessions. So please look at trading like that, because if you start to adopt that sort of mindset, I'm telling you, your life will be so much more easier as a trader. So that actually had nothing to do with what I'm going to discuss now. Sorry, by the way, but just needed to mention that, make it very clear. So patience. So why process over prediction? Let the news print. Trade the structure. So most traders fail not because they have a bad strategy, as I said to you a second ago. It's because they're impatient. It's because they don't know how to wait on their hands. It's because they see something move and they say, let me get in, only to realize that same up move that we had, it turned in the other direction and became a sell 15 minutes later. Now, if you waited for the structure to form, how I'm going to teach you guys how to trade, what you would have said is that even though it's going up, it's not broken anything on the upside or the downside. So there's no need for me to go in the trade. A lot of the times when I lost money, when I started trading, is because I was looking for a non-farm payroll. The moment I saw that candlestick go up, I was pressing buy, because I didn't want to miss it. What happened as soon as I pressed buy? The thing went up and went all the way back down again. I lost my unnecessary money that I didn't need to lose. Why? Because I was trading of momentum, not of structure. So when you guys are trading and I teach you how to trade properly, you're going to be one of those traders where you're going to have someone next to you saying, oh my God, NFP, non-farm payroll is coming out tomorrow, or the press conference is coming out at 7 p.m. Are you going to trade it? I want each and every one of you on this call to say, no, you're not trading the press conference. What I want each and every one of you to say is, I will trade it when it gives me the signs I need to enter the trade or to come out of the trade. It's that simple. The fundamental is just another form of analysis, as I said to you in the beginning, that you apply to your technical analysis and your psychology and the timing of your trading. You don't need to be in the market all the time. There is a thing called overtrading, and overtrading is something that gets a lot of people. Overtrading meaning if there's a week, as I showed you in the calendar, where it's got all of these news coming out, and you're like, oh wow, there's like 10 high impact news coming out. So overtrading is I'm going to make sure I'm available for every single one of those news releases that's coming out, and I'm going to trade it when it comes out. You don't need to do that. News is noise, generally speaking, especially medium impact news. It's noise. And what that means is that it makes the market go up and it makes the market go down. We need something to warrant us being able to move in a certain direction. The same way when you go to the gym and you have all of these different protein shakes and all of these different supplements to give you the energy to be able to lift the weight to progress, is the same way you have the markets and you have all of these different forms of technical or fundamental analysis that gives you that momentum to be able to put on a trade to make money. That's how you should see it. So if you are trading, just make sure that when you are exposing yourself to a certain amount of news, yes, you understand where the news is coming from. Yes, you understand and you've got a good insight into the news and you've got that thorough knowledge. But don't make that news be the reason for you going into the trade. That should just be revelation. It should just be insight. Always be patient and always be disciplined. And remember, patience does to some degree equal discipline. Because to have patience, to have discipline, you need to be patient. To have discipline means that you need to see something move and you're still not going to get involved. So as I said, process after prediction. Do not gamble on the news before it's been released. Wait for the release to come out. See what it does when you have your pattern that you've identified. If it breaks out of that structure, or you can see a pattern form over the next few hours or the next day after that news has been released, then you trade, because it's confirmed your breakout points based on your technical analysis. The first spike is what traps traders. As I mentioned to you, the first spike is as soon as the news comes out, boom, it shoots up 50 or 100 points, because people don't want to miss that trade. They get in and then they end up getting shafted, like many. Hence why they say 60, I think it's 85% of retail traders lose their money, especially in the first year of trading. It's because of stuff like that. They get excited, they get impulsive, they see movement and they're like, let me get in on it. We're going to be professional traders. So we've got the A-star setups only, and this is what you guys all want to try to embrace with your trading. A-star setups only. So A-star setup, what does it mean? We're only trading when the fundamentals and the technicals and the timing of our trading aligns cohesively, all as one. So what do I mean? You've identified a correction from the technical analysis on a Friday before non-farm payroll comes out. The correction in fact, let me bring up the chart, because that's the best way for you guys to understand exactly what I'm referring to. Okay, so GBP USD. This was non-farm payroll. As you can see, this candle here, that green candle is the candle that came out in non-farm payroll. That's when it was released. Now, anyone who follows momentum would have seen that going up and would have thought, okay, let's buy. What has it gone and done? It's gone up, then it's retraced all the way back down again. Very close to where it actually opened in the first place. That's why I say to you, always wait for structure to form. Don't just follow the momentum. Now, let me go back to the main reason of this point. So, the A-star setup, what you want to do, you're saying to yourself, you've got an impulse, you've identified a correction. Your analysis is basically saying that once this breaks this point here, once that breaks, you're looking to buy it. That's your analysis. Now, if you have data that comes out for the pound, let's just say gross domestic product, the data is really good. So the forecast was 1.0 and the actual was 2.0. That's very strong data. What that means is that this thing that you're looking at in terms of your trade, the probability of it breaking and going up is very, very probable. So what that means is that you now have confirmation to go and buy it. You definitely have confirmation to buy it. The fundamentals is good. The technical shows that it's going to go up. Everything is aligning with each other. Let's go. Let's put in a trade. Now, what if the forecast was 1.0, but the actual actually came in at 0.5? You still had your chart set up as a buy, but the fundamentals come out really low. What does that mean? This is where it gets a bit tricky, because what that means is that because that's such a big bit of important news, that can get this formation here, spiking up here very quickly, and then coming all the way back down again. Simply because the fundamental, which is high impact news, has actually created uncertainty and a bit of contradiction with the technical analysis and the fundamental analysis. So this is a very, very simple example as to how your technicals may not necessarily be aligned with your fundamentals. And it's very important to understand that. Now, what if you had your technicals saying that it's going to go up, and you had fundamental news that come out and it was medium, but it still broke it to the upside. What are you going to do? Are you still going to go up and buy it? Or are you going to say, let me not get involved in the trading? What I would say is, generally speaking, most technicals, you can, if it's strong and if it's in the direction of the long-term trend, which is up, generally speaking, you can still buy it if the fundamentals came out bad. But if it was bad if it was anything, like I said, there's very, very big news where you have to pay attention whether you like it or not. That's the press conference. If the press conference came out and you had an uptrend and it broke it to the upside, and the press conference for the pound said we're going down, the economy's going weaker, I would probably hold off on this trade, wait and see what happens. I'll try to see what sort of structure or format pattern is it going to create? And then I'd probably say to myself, let me try to look for the sells. Simply because from a fundamental perspective, especially the press conference, because it's such a high impactful news, I would rather kind of try to be on the same side of that, because the large central banks do follow a lot of what has been said and confirmed within press conferences. Hard for you guys to understand now, but don't worry, we're going to get into a lot more detail as we continue to progress throughout the weeks. So to go back to this now. So the A-star filter, so what it means is that fundamentals, ideally, you want the fundamentals to align with your technicals, and you want your technicals to align with the timing of the session as well. So with the timing, you just want to make sure that if something is broken to the upside and we've had a strong piece of fundamental news, ideally, in an ideal scenario, you should have no reason to not be in that trade, whether it's a buy or a sell. And if you have fundamentals that does align and you're not in the trade, I will be asking you, what are you doing? And this is where we now need to understand, is there something else that's going on with inside you? May it be psychological, that's preventing you from going into trades? Because to some degree, we need to be robotic to some degree when we are trading. If one piece of technical is missing, or one piece of fundamental is missing, as I said to you, that's what we'd call a B setup. The B setup, we can still go into trades, but apply some sort of discretion. And we need to understand that at some point it could turn around, but we need to just track it and trace it as we are coming into the trades. What we shouldn't do is say to ourselves, oh, just because that medium impact news didn't align with my technical analysis, I'm not going to go into a trade. We shouldn't do that. We just need to make sure we're aware of how heavy and how impactful the news is in comparison to the technical trade setup that we have at that time. And also remember that quality beats quantity. So if you do miss a trade or two trades throughout the week, no problem. The market's presenting opportunities every single week, every single month, every single day. There's always an opportunity to make money. You just need to realize to yourself that if you do miss an opportunity one day, don't use that as a reason for you to start chasing other trades to a point where you're now potentially adopting bad habits or toxic habits because you're scared of the fact that you may not be able to get such a great opportunity again. There's always going to be time to make money in the markets every single day. If it's not an indice, it's a forex. If it's not forex, it's a commodity. If it's not commodity, it's crypto. If it's not crypto, it's stocks and shares. We've got so much trading instruments accessible to us. If you commit yourself enough to the markets, you're always going to have time and opportunities at your hand every single week. Now, orders chasing. So what we want to do, so use orders instead of chasing. So order chasing, basically, what I'm referring to is using a stop limit orders at optimal limits. So basically, when I say that is that when there's a lot of momentum in the market, what we can do is we can use what's called automated trade setups. So what that means is that we're not manually going into the trade ourselves. We are going into our broker, Vantage, for example. We are putting in a open to order. And what we are saying to ourselves is that because there's so much volatility, if it breaks above or below a certain threshold, it's going to automatically open us into the trade. So therefore, we can be a lot more reliant on the computer and the algorithms, rather than trying to chase it manually ourselves. Because what you'll find is that sometimes the markets move so quick, there's just not enough time for you to get in at that point you wanted to get in. And if you've not gotten at that point in which you wanted to get in, that can play on you psychologically, and then it may prevent you from even wanting to go into the trade, because now, as far as you're concerned, you've missed your entry by a good 50 to 100 points. So sometimes I will, as I'm going to teach you guys going forward, it will be necessary to do order to opens. I trade manually because I don't trade on fundamental news, but it's definitely it's stuff that I've done loads of times in the past. It's stuff that I'm open to doing again, and I would definitely say it's always a good it's a good tool for you guys to have in your arsenal, in your bots as well. And then also respect risk as well. So respect high impact news. So if you're in a trade before a big news release, always use a stop loss. If you haven't got a stop loss and the press conference comes out, there's a potential that you will probably lose your whole account. And we don't want that happening to none of you guys, because we want to make sure everyone is able to give very good reviews going forward as well. So make sure you're putting a stop loss there as well. Anytime before you're seeing high impact news, always respect it. And be aware that spikes may trigger orders if you do have an open to order, and it may widen your spread as well. So if you have if it costs you 1 pip to get in a trade, when very high impact news comes out, generally speaking, that 1 pip goes to like plus 10 pips. So the spread is now massive for you to get in the trade. So just bear that in mind. We'll look into that into more detail. And sometimes the best moves and the best trades for you lot to get involved in are the ones where you're just sitting on your hands, waiting for everything to settle again. And then once it confirms your structure or it breaks it, then you go in. As I said to you, there's always money to be made. The most impatient, there's a quote that I always use, and the quote is, in the markets, money moves from the hands of the impatient to the patient. That's how it always goes. So generally speaking, you'll realize that all the successful traders are very patient. You'll say to them, why did they not go? Why are they not getting in that trade? They'll be like, I don't need to. I'm waiting. It's not confirmed things that I needed it to confirm. Therefore, I don't need to get in that trade. And when you start to develop that consistent mindset, you'll find that you'll be in the top 5 to 10% of successful traders. So try to have that mindset when you are trading. And speed is a trap. So as I mentioned, fast moving candles, it can make you feel like you're missing out. You're never missing out. So don't worry about that. Remember, momentum doesn't really confirm direction. Just because something is moving up doesn't mean it's going to keep going up. It's just momentum. And the markets usually, generally speaking, reverses after a spike anyway. When something spikes very, very aggressively over a period of 5-10 seconds in one direction, or a few minutes, generally speaking, you tend to get a reversal after that as well. So that's something to kind of look into and be mindful of. And stay aligned with the technicals and don't focus on the momentum. And remember, in terms of patience, persevering capital, patience which perseveres capital and confidence. Patience reduces stress. It allows you to not second guess yourself. And it's very important for you to journal when you're patient. So if you have been patient, put in your journal, write it down so you can refer back to the times where you've been patient, just to remind yourself of the importance of continuing to be patient. And if you trade long term and you see things from a long term perspective rather than a short term perspective, that also allows you to avoid losing unnecessary capital as well. So to conclude it, be patient. Markets ain't going nowhere. Don't fall into the hype of all of these fast moves, and make sure that you're disciplined in your approach to trading every single day, and you will do good. You will be successful. So that concludes our lesson for today. And if you guys have any questions, let's open it up to maybe about 5 minutes worth of questions. And after that, we'll conclude the meeting. So any questions, guys, feel free to unmute your mic.
Could you just share this slideshow in the group chat after, please?
Yep, that's fine. I'll share that.
Thank you.
So you mentioned obviously about basically, I really like that point you made about impatient traders make patient traders money, basically. which is literally just that kind of just puts a lot of things into perspective essentially and comes back to this whole mindset thing. So it would be good to, I'd really love to kind of understand the mind of a patient trader, like you said. And obviously, once we get more into the technical stuff and you show us, like in the physical,
Yeah.
what that kind of looks like. I'm just, I don't think I have a question. Sorry, I think I'm just speaking. I'm just trying to like take it all in, but
Yeah,
yeah.
no, I appreciate you definitely resonating with that because if I'm being honest, this is the most important part of today's lesson. You know, the previous part I told you is just to make sure all of you are informed, that you guys have the level of insight that's needed to make decisions when you're trading. But the most important part is once you are informed, how do you make your decision? What influences your decision-making process? Is the momentum influencing it, or is your discipline and understanding how the markets move and how structure is formed, or is that what influences your decisions? And all of the money that I've lost in the past, yeah, I've lost it because I've been impatient, because I've been greedy, because I've chased losses, and because I had a scarcity mindset. And when you have a scarcity mindset, that does have a direct link with being impatient. Because what it means is that in your mind, you're thinking it's moving. I may not have this opportunity to make money again. I said to you guys, the markets move every day. You can make money every single day. It all just boils down to the level of commitment and the amount of time that you put into seeing these opportunities. The opportunities there is just about seeing it. And with the patience, there every week you guys are going to see as you continue to trade and start to trade, there's going to be very volatile moves. And it's going to be very, very enticing. I'm telling you all, as beginner traders, there's going to be points where you're going to put in £1 a point or £5 a point, depending on the whatever capital you have within your account, and you're going to be tempted to press that buy button because you see something moving up so quickly, and in your mind you're like, okay, this could keep going. If it keeps going, I may not get it again. Those are the times where, as appealing as it looks, it can ruin your whole account. So just always being patient means taking a step back. Being a patient means always being reflective. Being patient means always asking yourself, I can see what it's doing. I can see it's moving. Clearly, it's moving, but what does it mean in terms of my pattern that I've identified? What does it mean in terms of the structure that is creating? What does it mean in terms of the trend that I've seen from a daily perspective or a weekly perspective? Ask, be critical, be analytical, and question why is it moving in that direction, and then ask yourself, has it confirmed all of my tick boxes that's going to warrant me getting involved in that trade before going in?
Bentley,
Yeah.
do you recommend studying the economy before actually trading? Like I know you said about patience. Do you think it's best to study the graphics of what's going on in the world before actually getting into trading? Or do you think with the knowledge you're given, you don't need to wait that long to do all the research on it?
Yeah, that's a very good question. I think do both hand in hand. You can trade without having to fully understand because when it comes to the fundamental analysis and the macroeconomics, there's so much to it. And the fault that I made when I started is really trying to understand the fundamentals, how everything worked, how the world worked, how the fundamentals worked, really trying to grasp it 100%. And because I tried to grasp it 100%, I was procrastinating with just getting the job done, with just, starting to trade. Don't get me wrong, there's a balance. You need to make sure you're trading when you're confident, when you're comfortable, and when you have the initiative to put on a trade and you know where the markets are going to go. But to answer your question, do it hand in hand. Ideally, what I'd like all of you guys to do is after this call, try to look at these sites that I gave you and really just kind of look at the folders and understand, what does NFP mean? What does GDP mean? What does CPI mean? What is a press conference? What happens in a press conference? When you start to understand those fundamental things, as we start to go into our third and our fourth week of trading, hopefully you guys will be able just to kind of piece it all together all at once. And that's the whole point of me teaching you this first, and the technicals in the next 2 weeks from now, because I want to give you guys the opportunity to really home in on this and really understand it and grasp it. So by the time we do get to next week or the week after that, all of you lot should be kind of on point. So it's very that, and hence why it's very important for all of you lot to be in these sessions every single week. Because if you do miss this type of session, then yeah, it's going to be quite hard for you to really focus on the technical analysis, not understanding what does fundamental analysis even mean? What is Bloomberg? What does it mean to understand the economic calendar? It's going to be very hard for you to trade the technicals. And the reason why I say it's going to be very hard is because you will trade the technicals, something might happen one day, and you're going to be like, what the hell just happened? And because you're going to be thinking, what the hell just happened, you're going to feel uncomfortable. And once you feel uncomfortable, you're going to start feeling scared and fearful. Once you start feeling fearful and scared, it's just a downhill. It's a downhill spiral from there. So yeah, try to learn it all hand in hand if you can.
Cheers.
Cool. If we don't have any more questions, I think it's safe to say that we can wrap up. I will provide this presentation in the group. Give me about a couple of hours, and also the links that I discussed with you guys as well, and we can take it from there.
Thanks.
Brilliant.
Thank you.
Thank you very much.
You're welcome.
Thank you. Thank you.
Cheers, bro.
Very-
Yeah, thanks, Lindsay.
No worries at all. Have a good one. Speak to you soon.